Hey everyone, welcome back to Corporate Decoder, the place where we dig into company reports so you don't have to. Today we're looking at Black Box Stocks. It's a company that offers real-time stock market data and analytics. Sounds exciting, right? Well, their latest annual report, let's just say it's a bit of a roller coaster with a possible merger on the horizon to shake things up. First, Black Box Stocks is a Nevada corporation that provides a platform for traders. They analyze stock market data and offer a social media aspect for traders to connect. Think of it as a Bloomberg terminal mixed with a trading chat room. They have monthly and annual subscription plans for individual traders. Now let's dive into the numbers for the year. The report covers financials as of December 31, 2024 and compares them to 2024 and compares them to 2023. Get ready because here comes the part where we see what's really happening. Total revenue for 2024 was about $2.57 million the previous year. That's a decrease of over $500,000. This decline was mainly from losing subscribers. When you lose subscribers, you lose money coming in. It is basic. Their cost of doing business was about $144 million. This leaves them with a gross profit or money after those basic costs of around $1.3 million. Again, this is down from $1.44 million the year before. Fewer sales will do that. Operating expenses also went down, which is good. They spent about $4.44 million less than the $6.74 million they spent the previous year. Some of the biggest changes were in software development and marketing. Other income and expenses also changed. In 2023, they had about $613,000 in other income, but that flipped to $116,000 in 2024. Finally, the bottom line, Black Box Stocks reported a net loss of almost $3.5 million for 2024, although that's less than the loss of over $4.6 million the year before. They use a measure called EBITDA, which is how much they made before interest, taxes, depreciation, and amortization, and some other non-cash items. By this measure, things are still down. They are reporting a negative $2.9 million. Now, it's not all bad news. They're looking at this possible merger. Black Box Stocks is planning to merge with RE Alloys, another company. This is a big deal, and it could change the direction of the company entirely. Interestingly, they had planned to merge with another company called Evtech Aluminium, but that deal fell through. So it seems like they've been trying to find the right partner. The details of the Realloys merger are pretty complex, involving new stocks and agreements. After it closes, existing Black Box stockholders are expected to retain only around 73% of the new company. In other words, there will be a new boss running the show. Black Box Stocks issued an additional debenture and agreed to make certain changes to the registration rights agreement. This is a short-term loan that needs to be paid. The CVR's payment obligations will expire. These are complicated financial arrangements, these value rights for existing stock. To secure that debenture, the company and a subsidiary agreed to a security agreement which grants the agent and purchaser a first priority security interest in substantially all of the assets of the company. This means this debt takes precedent over other payments. Let's look at the risks that they themselves think are important. The big one is maintaining their NASDAQ listing. If they don't meet certain requirements, their stock could get delisted. That would make it harder to trade their shares and raise money. They also admit that their revenue can change a lot from quarter to quarter, which can make the stock price go up and down. It may be unstable, so they are saying to be careful. They need to keep signing up new people and they can't afford to see existing customers cancel their subscriptions. If they can't retain users or attract new ones, it will hurt their financials. They also know that they have a lot of competition. They need to keep improving their product to stay ahead. Some of their biggest competitors include Trade Ideas and Flow Algo. Protecting their intellectual property is another risk. If someone copies their technology, it could hurt their business. Then there are a lot of risks related to the merger itself. The merger might not happen, and even if it does, it could trigger other problems. Finally, they discuss cybersecurity. While they claim it's important, the measures they list, like password policies and insurance, seem fairly standard. I'm not impressed that the company is not more concerned about data security, especially considering the type of service they provide. There was one director that died. On January 21, 2025, they replaced him with Grant Evans. There is information about the executives and directors and what they do, but nothing too interesting. They say that everyone complied with the rules about reporting their stock ownership. That's good. Most of the agreements are not interesting. They are standard contracts about how to do their business. The independent auditor says they have substantial doubt about its ability to continue as a going concern. That is never good to see. Now, what is my opinion about black box stocks after going through this report? Well, it's definitely a company at a crossroads. The revenue decline and continued losses are concerning. They're losing customers and the competition is tough. While the merger with Realloys might offer a fresh start, it also means existing shareholders will own a much smaller piece of the pie. The loan from FNL, while providing needed cash, adds more debt to the balance sheet, which is not great. I have to say that their attempts to reduce costs is a good sign of management doing its job. There might be hope ahead. Overall, investing in black box stocks right now is risky. The company needs to prove it can turn things around, either through the merger or by finding a way to attract and retain more subscribers. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, give us a like, leave a comment, and definitely subscribe for more deep dives into the world of corporate filings.